All right, we have got to talk about the peg play. This is one of maybe the hottest model in the market right now. And I'm going to show you exactly how I turn earnings gap ups into a structured 3R model hitting at over 70%, even higher in this current market environment. Yeah, I'm talking about a money printer here, guys. Let's just jump right in. Before we look at the entry, the trigger, I need to make two things very clear. And this really goes for anything that I talk about on the channel, but we must be applying any model in the right environment. And on top of that, we want to be focused on the right stocks, the leaders. So with the right environment, you must understand that the current Q1 2026 earnings season we are smack in the middle of is a completely different environment than the past two, Q3 and 4 of 2025. You have to notice that. In a strong environment where there's follow through, dips are getting bought and leadership being rewarded, peg plays get super hot. But in a weaker tape, they're a little less reliable. So environment matters and you must learn to read the room. It's called market breadth. And the second thing I touched on there is applying this to the leaders. That's what I like to do in all of my models. I don't want just any stock gapping up on earnings. I want the leaders because leaders lead. I want something that was already outperforming, already had relative strength, and I want to see accumulation signals prior to this most recent gap on earnings. This suggests that institutions were already involved before the most recent report. Because when strong names gap up on earnings and hold those levels, names that were already leaders, then the odds of follow through dramatically improve. Now, finding the leaders has become extremely simple for me. Here is ClearTape, a tool that I have built that identifies leadership. It's a market breadth leadership and rotation dashboard, but I've got some strategies loaded into here and we're going to click right over to peg play. And look, very simply put, this tool tells me where to focus. It identifies the leaders and it is now loading me a list of current qualifiers for my peg play based on the rules we are about to discuss. And once we have all of those things, the right environment, the right names, the leaders, what we do next, the trigger becomes very simple. So we'll go ahead and export this list and drop it right here into TradingView. We'll do upload list and we're going to open this up. And what I have here is a list of recent and currently triggering peg plays based on the entry criteria that we're going to get into right this second. So what do? As always, I keep my charts very simple. I need structure, trend, follow through, leaders in the right environment. Of course, do not forget that. It is very important. No model's job is to save you from bad context, okay? Its job is to give you a clean way to participate when the environment is right, all right? And the environment is right for peg plays, and this is how we do it. So first thing we need, I want a gap up of at least 5%, okay? I would prefer 10% or more, but when you're talking some of these larger mega caps, 5% is a pretty big gap, guys. But I want at least a 5% or more gap up on 200% volume, meaning 2 times that stock's average volume. All right. And you can see right here on Texas Instruments, that is exactly what we got. We got a big gap, big volume. Boom, hit the radar. ClearTape pulls that in for you, makes it very easy to see these things, but there are other ways to find these things, of course. Now that we have the gap up on volume, we need to place a anchored VWAP on the gap day and a fixed range volume profile also here on the gap day, okay? And move that thing over. I'm going to move it over to what I can clearly see as the trigger day, which by the end of this video, you will understand as well. But we want to imagine that, the rest of the price action had not happened yet. And here is the model. What do we want? We want to think about who is in control since the gap, because a gap up on names like this creates repricing, repositioning, a whole new battle. Okay. This thing was already a leader. Now it has gapped up again. It is a fresh battle from the institutions, most specifically. Okay. Retail is not moving TXN. There are levels that matter to get a feel of who is in control. And that is what these two very simple indicators measure, okay? Who is in control? So you have the anchored VWAP and you have a fixed range volume profile right here. As you can see, the lighter shaded area, and all that does simply is measure the highest point of volume within the fixed range. The fixed range is wherever you place, okay, the start of the fixed range volume profile. and you can move this thing out. It does so automatically to the following days once you place it in here. All right. And then that yellow dotted line is the point of control, the highest volume of the fixed range. And very simply, price above suggests that buyers are in control. Below suggests that sellers are in control. Same thing with the anchored VWAP. Price above the anchored VWAP from the gap day suggests that buyers are in control, and below sellers. So what do we want to pull the trigger on a peg play besides the right environment, knowing that we're dealing with the leader? We want price above both. And most specifically, I want an up-sloped anchored VWAP. And you can see that is exactly why I stopped here on this candle, because that is what we got. All right. We had the price get up above our yellow dotted line, the point of control, highest volume of the fixed range, and we are above at that point what began to be an up-sloping anchored VWAP. Boom, that is your trigger. Go ahead and slap your entry in there, put your stop. That can be below the entry bar, but sometimes I like to tighten that up and put it just below the anchored VWAP and point of control. And this is a 3R model, and look at that. And I'm not cherry picking. This is the exported list, but what do I know? That these things work more often than not because they are the leaders and they meet my criteria that I'm describing to you today. The tool just finds it for you. Okay. But guys, look at this. 1, 2, 3, 4, 5, 6, 7 days later, bang, 3R. If you're talking options, big gainer here, but you don't always have to apply leverage, you guys. This is still a 6% move. Stack that up over the year in your account. All right. Do not force leverage if you're not ready for it. I talk about options most because I have the data that backs my decision to use leverage. Okay. But look, in this example right there, 7 days later, I'm not cherry picking. Here is the next one. I did drop these in chat. You guys, look, if you're struggling in these markets, I offer a mentorship where I work with you directly one-on-one. I show you this and 5 other trend continuation models, how to read market breadth, how to design and build your own risk profile, match it with the market risk profile, market breadth, okay? Actually find your footing, get some traction, and leverage these markets for what they were fundamentally made for, to make money, but you need a process. You need the conviction to stick to it. Guys, if you're struggling, don't let the markets be your only teacher. They are a brutal one. Guys, this is INTC, and what do we have here? We get the gap up, 200% volume, 2x average volume, slap on the anchored VWAP, the fixed range volume profile. There's a reason why I already have this in here. Bang, that was our trigger. 1, 2, 3, 4 days later, we've got over 3R on this trade. Guys, this model is hot right now. It is the perfect environment, okay, for the peg play. Leaders are leading. They're gapping up. They're following through all over the place, especially tech. All right. As of mid-May 2026, tech is leading the market higher. But listen, guys, earnings season isn't over. And if money rotates into some of these other sectors and themes, this is a hot model right now. Okay. It's just the perfect environment for it. And that is not always the case. Do understand you must apply this in the right environment. Late 2025, early 2026, when we had those earnings seasons, gaps were getting faded. Okay. Because we were in a corrective period in the market. All right. So when you start to notice gaps get faded, obviously, I've not talked about peg plays in months on this channel because of that. We were in a corrective market. I wasn't applying it. Okay. But it is hot right now. And I have to make this video because you need to be looking at this stuff. You guys, let's just keep going. MXL, the hottest stock in the world right here. I'm not cherry picking these. They're right here. Okay, guys. It's auto loaded in here and we're simply going through in the right names in the right environment. Yeah, this stuff is crushing right now. You get your gap up, massive volume. This one actually had 18x average volume on this gap up. Yeah, you should go watch that thing. Okay. Going back to the chart here, we get the gap up, pulls back a little bit, comes back, re-triggers over the point of control, upsloping anchored VWAP. That is your trigger. Stop goes just below the trigger candle on volume. That is a defense candle for me. 1, 2, 3 days later, take your money and run, my friend. Start looking for triple R's after this is what I do. But guys, we can just creep all the way up this list and just see that these things are working, simply working more often than not. Here's our point of control. We started to upslope right here. This is our trigger day. Bang. Stop can go just below the point of control, which would have creeped over. So we would have want to bring that stop up. Let's Let's see here. Yeah, we certainly would want to be creeping that stop up just a little bit. This one has not realized full profit yet, but darn sure don't lose money on it. Okay, we got TTMI. This one is currently on watch. It has not triggered yet, and this one is absolutely something I am currently watching for a trigger. We've got this little range right here, so I'd like to see it clear this range on top of being above the point of control and an upsloping anchored VWAP. That might happen today. How would our trade look? Bang, something like that. Stop go there. 3R target off of it. Now we're talking. All right, we will see. We will see here on TTMI. Let's go into a couple more. We got AMD has done it. Gaps up. 200% volume. Slap in your anchored VWAP, fixed range volume profile, trigger candle, 1 day later. 3R. Money printer. Guys, this is the hottest model in the market right now. I'm freaking out. I'm freaking out because sometimes the market gets exciting like this, okay? For 6 months, we were in capital protection mode, all right? The market's super extended, right? I still have rules that are keeping me from going into my max exposure, right? I have a risk profile and all that stuff, right? But this is where I'm focusing right now, peg plays. So flex. Now, this is one, I get this question all the time now is like, hey, what if it just rips and it goes? If you'd like, if you're more aggressive than me, for the answer for me is I just wait for the ones that don't. Something like AMD, okay, Google, TXN, MXL. I just wait for my daily. It fits my schedule, my risk tolerance, all the stuff I trade the daily, right? But I mean, something like this here on Flex, you could roll this down. Markets are fractal. You can roll this down to the hourly. Let's take a look at maybe when we could have traded this thing on the hourly, moving this thing over. Right there, my friends, right there is your trigger candle on the hourly. If you're watching and being that aggressive, bang, let's go 3R off of that. A day later, 2 days later, pay the trader, move on. All right, guys, so I have a few more here. Let's go back to the daily that are on watch. We got a gap up right here. Guys, this is technically triggering. I'm in Thailand. By the time this triggered late in the session yesterday, I was asleep. This is on watch today, okay? As long as the market continues to look as good as it does, this VAAV, D-Dog is looking good. I mean, guys, peg plays. All right, that's all I want to say. This does not need to be a 30-minute video. Peg plays, right environment, the right names, gap up on 200% volume, 10% or more, fixed range volume profile, anchored VWAP, price above both, trigger, 3R model. Have at it. Guys, stay safe, manage your risk. I'll see you soon.